Morning, everyone. Paul Duncan here. Wanted to give a quick intro to the charting bot within the GammaEdge Discord. Purpose here is to really just cover on a high level what's available and to go through a symbol or two and show you how you could potentially use this to do some analysis and review of a given stock. The charting bot is located in the bronze section, and if you are a gold or a bronze member, it is available to you. There are a number of commands that are available, and if you type help at any command line, you'll be taken to effectively what are Google documents that we update in quasi real time, and the charting bot document will walk you through all of the details in greater detail than I'm going to do here today. So I would urge everyone to be familiar with that. One of the first commands that is probably one of the first ones that you'll run when you join is the just basic charting command, which starts with a $C. And if we were to run Apple, for instance, in doing that, it literally is $C and then a space and then the ticker symbol. And you can see that three charts come up in that particular case. The first chart is what we call the wing chart. And the wing chart describes the cumulative gamma exposure, or GEX, that we're seeing for a given symbol. And here at the top, it's showing the time in GMT. We do have folks from around the world who are in different time zones, so we do try to refer things to GMT where we can. And then in this particular case, we're looking at all of the options that are available, so the entire complex. And if you recall, we didn't type any parameters on this chart. This particular chart shows a green wing and a red wing. The green wing is the cumulative GEX for Apple. Excuse me. And you can see that the right-hand side of this, or the green wing, is larger than the red wing. So even looking at a view like this, you can immediately see that this is in a positive gamma condition, even though the spot price, as you see right here, is in the red area. Overall, gamma exposure for Apple is still positive, and you can see a lot of the gamma exposure with this given spot price is shown there. 1 second, please. Sorry about that, I got a tickle in my throat. The next chart that we have is a daily price series. And the daily price series gives us actually quite a bit of information. I will say gamma levels, although they don't change rapidly, they may change somewhat intraday, generally not. What we do see is that the further back we go in time, the levels that are shown here in the different tags that you see here don't necessarily apply. The reason I say that is that gamma is a function of spot price, and it's also a function of open interest. And as people buy calls or buy puts or short calls and short puts, these levels do change. And so I think what's important to understand is that in general, this daily chart is most accurate for the levels that are indicated on the right-hand side of the chart. And actually that's kind of consistent with what you see with moving averages too, right? So we've got the 50 here in orange, we've got the EMA, 21 EMA here in magenta, and you get a fairly good idea of what the behavior of the chart is and what the stock is doing relative to those values. Some other information that's on here is the open interest that's available here. So this is Apple. It's got over 6 million contracts, so very liquid stock. The closing price as of the time that you see here. So when you run this intraday, this time will update in real time. This is the last valid print that we took on Friday, and hence what the near close price was. And then we overlay it with different gamma levels, and you can see call open interest, which is where for the entire complex, where the majority, the peak call open interest is located, and then its corresponding put open interest is down here at 170. And actually you can see that price is below where the put open interest is. Now, just because these are the dominant open interest levels for calls and puts does not necessarily mean there's a gamma influence. The days to expiration of that changes that equation. And so from that, we glean where is the dominant positive GEX and negative GEX. And basically the plus GEX is showing here at 180. And the negative GEX is showing here at 160. And you can see those relative levels, that there's actually quite a bit of overhead positive GEX, and you can see slightly less negative GEX here. Can be very, very useful in general of just knowing where you are within these different regions, and it's something to pay attention to for the stocks that you have interest in. The zero GEX, we do round to the closest strike. We find that, knowing that it's in the middle doesn't really give a huge amount of information, simply because at the end of the day, we have to trade the various strikes. Zero GEX is literally, when we look back at the wing chart, it is the intersection of these two curves. These curves have been smoothed, as you can tell, in the mathematical treatment of these. They're not smoothed, and we can actually calculate the exact zero of the system, and then we round that to the nearest zero within the complex. We also have a construct in here which is fairly different than most others. We have a transition area, and this is fairly important. The document, the gamma charting document, does describe this, but I want to kind of highlight some things. The positive transition is sitting at 175 for Apple. And what that means is that for that strike and all strikes above it, we are in a positive gamma environment. So if price is up above positive transition, then most assuredly, at least for the current conditions, we are in a positive gamma environment. Lower volatility, calls are most likely being added up and out in time, and the entire complex most likely is moving up in that condition. Conversely, negative transition is the flip side of that. And what you see here is that we see that for the strike that's included, 165 and below, that for this specific chart, all of that is negative gamma. And so when price is within a negative gamma, we expect higher volatility. We actually expect maybe the model is going to shift. Now, I will point you back to the chart here. We are still seeing a positive gamma environment, but of course the price is almost up against that minus GEX that you see there, that put GEX at 160, which means things are going to get more volatile. So we're seeing a transition here that may or may not bode well for Apple. It's hard to tell at this point using this data. The final chart that we have in the sequence, excuse me, is the minute chart. This is very useful during the day. I use this all the time to get an understanding of how price is bouncing against various levels. And why this is important is that we often find support and resistance at these different levels. And when we find, when we have a big bar, for instance, of gamma, whether it's positive or negative or whatever, we tend to see that act as support or resistance. So for instance, until it's violated, the positive gamma at 180 is most likely going to act as a overhead resistance, much stronger than, say, these other bars that are below it. And the same thing here for the minus GEX at 160, most likely will act until it doesn't as support. Now, one of the key things that I didn't highlight on the previous slide about this positive transition, the zero and the negative transition, in that particular area, there's not a lot of dealer pressure. And this chart really exemplifies that. And you can see that we're actually going back and forth between positive gamma, negative gamma at the 172.5 strike, back to a positive net gamma at 170, etc. And what does this mean for us? This means that in this area, the dealers most likely don't have a lot of pressure in terms of gamma. They still have delta hedging requirements, and they're still going to try to drive towards what we call a flat zone or a zero. But the key here is to understand is that when we're in this transition range, we often don't see a lot of movement except during the midday, which is when the market is pushing things around, and we don't see a lot of dealer interaction. Doesn't mean it can't happen. It just means that we don't often see it until we get outside, either in a negative transition and lower, or we get into a positive transition and higher. So something to think about as you look at these different charts. For Friday's action here, by the way, you can see that the zero gex, which is the zero of the system, was providing, even though it's, it ends in 5 or a 0, so you could argue that this is just a confluence of public sentiment, but it was representing as a overhead resistance, and we just couldn't get through it. So, there are signals that you could actually take as it penetrates these different levels, and we can use that to our advantage here as defined risk and reward. Another command that is very, very useful is the summary command, and that's a $S. And if you don't remember all the syntax of these commands, you can always type $C in the word help or $S in the word help, and it will give you context for what you're seeing or how you should enter the various commands. So for instance, if I do a $C help, it'll give us all the parameters that we can actually do. And there's more than just the ticker. We actually have other parameters that are covered in that document that you can add to allow you to zoom in on a given chart and do things. That's what the minimum strike and the maximum strike are. So those are covered in that document. And if you have any questions, don't hesitate to post something in the questions channel, which is down here in the bronze section. So the $S command for Apple gives us a summary command. And why that's useful for us is that allows us to look at the numeric values. Some of the members like to use charts, and they like to see the price overlaid with the charts. Other members like to use the text command, and they use it actually in conjunction with the current status, which is what the $S is. And then if you type a $SS, and again, I'll just do help here so you can see what that looks like. That basically, and I'll do AAPL again, and this is going to give us 2 summary outputs. Now, why is that important for us? Well, this actually represents the shift in Apple after expiration. And why this is important is that this can tell us a few things about the change in OI after the expiry. If we see a change in call open interest, we don't in this case, they're both 200. So the calls are staying intact. Put or plus GEX here at 180, and again, plus is 180 here, not seeing a change. Positive trans at 175, no change. Negative trans is actually, look, it goes from 165 to 172. So we've got puts actually coming up, meaning either more puts are being opened above spot, which is interesting, or calls are being closed, allowing the negative gamma to actually go higher up the chain. That is not necessarily a great indicator of moving forward, but it's an indicator, something to take note of. And then we overlay the SMA 50, which is the simple moving average on the 50-day, as well as the EMA 21, and you can see those levels. And these values are sorted right now in descending values. So you will get a shift depending on from high to low, depending on what the calculations show us. The key takeaway in this, though, and you can do, by the way, you can do the same thing with the chart command. The $CC will also allow you to do some things here and get these back-to-back charts. You're looking for a state change, and there's a couple ways to do that, and this is one of the theses that we have here at GammaEdge, is that looking for these transitional changes is what actually causes a market to shift. And you don't have to look back any further than March of 2020 and look at the outcome of that monthly OPEX there to know that the the closure and expiry of the puts in March of 2020 had an influence to us basically coming out of that severe decline, and then leading obviously to what we did in overall in 2020. If there's any question of the expiries that you have on a stock, you can also, on the options for a stock, you can also type $D. And again, if I type help, you can see what that gives us. So $D, and then Apple will give us the next 5 expiries. And why that's important is you can use that information right there to understand what is the gamma distribution of what's expiring next. And that command is a $E. And I'm going to type help here just so you can see what that looks like. And you can see $E ticker, the minimum days, for instance, 0, maximum days, here 5. That would give me effectively, I could run and see what is expiring now in the 0 to 5 day window, or I could do a 6 as minimum days to 12 and see what's expiring next week, etc. So now this gives me the ability to isolate the expiries as necessary. And we think that 5 weeks is really only enough, or really only what you need to see. If you try to go out any further than that, your crystal ball's as good as ours. The min strike and max strike is if you want to zoom in. For instance, Tesla has a whole bunch, technical term there, bunch of puts sitting down at the $1. But as most of you are aware, Tesla is a $1,000 stock. So when you plot the charts, it's all compressed. And so by specifying a range, you're able to zoom in on various things. Same thing with like SPX, SPY, which are very concentrated, very dense in certain areas. And this will help you zoom in and do things. So if I want to see for Apple what's expiring this coming week, I would type $E, AAPL, 0. And because the dates here show 5 days, I'll type that 5. And I'm not going to zoom in right now. I'll just go ahead and leave that. I hit the enter key. And what we get out of this is a chart that basically shows us the gamma distribution for what's expiring. So I ran it just now. It's from here to here. You can see that the dates are 22. And we're going out to the period here. And basically, this is showing what's expiring next Friday. And why this is important is this helps us understand what is being removed, and when gamma above us is being removed, it potentially, depending on overall market conditions, can help move the stock upwards. You're moving a barrier and overhead resistance, for instance. But also note we're losing some puts. And so the magnitude of these accumulations of gamma exposure here can actually show us that we have more call open interest expiring and gamma expiring than we do in put. And that again can open up the door to moving higher, or it can give a dominance to the lower side. So we have just to watch what's happening here. Do we get above the 0, which is projected here to be at 165, and see what happens. But anyways, this can give you a very good idea about what's rolling off. And for many stocks, when we see a huge amount of put open interest rolling off and very little call open interest rolling off, or call gamma exposure rolling off, that can also lead to a Vanna rally if the market conditions are correct. So this is very, very helpful in that context. So there are, as I said, there are other commands available. If I want to look at, say, the back-to-back of charts for Apple with the next expiry, this $CC allows us to do that. And it's going out right now and it's grabbing those charts. And so you can see that the green wing remains above the red wing. So we remain in a overall gamma positive condition for Apple in this current week as well as the following week, given the data we have today, right? It changes daily, so you need to check this stuff. We can see that when we take the open interest away after the next week, do levels shift. And in general, we're not seeing a huge change here, although as indicated before when I talked about the SS command, we did see negative transition come up from 165 up to 172. And if you look at the chart here, we do see 165 here in orange, which is right here, 165, now moving to 172, right? So now we've moved up, and we are clearly remaining after Friday's expiration. We are clearly remaining on the negative side or in the negative gamma world. It doesn't mean that the overall complex is dominated in negative gamma. It just means that short term we are in this particular area, and that can be very, very important for where we are, especially as we roll into earnings or we roll into option expiration. And then finally, one of the key things that I think is important here is we can look at how when we overlay this, let me kill this real quick. When we overlay the minute chart, we can see as those levels shift, what does that mean? Now, of course, this is just projection of Friday's minute data into a week-long expiration, but it does show us that if we don't get up a significant amount by next Friday, we're going to remain in a negative gamma condition, and that can be very bearish for the overall stock, and it may put pressure on the overall distribution that you see here. So I hope this was useful. Again, you can run these charts at any time in the charting channel. For the more liquid stocks, if you're a gold member or if you're on trial, you can go down here to Liquidity Watch. And overnight, the bots will automatically populate all of these charts for you. You don't have to do them yourself. This is a feature for the gold members. It's a big time saver because you can use this in the morning just to review very, very quickly. You don't have to wait for the charts to populate, and you can just literally step right on down what we think are the most highly liquid stocks that are out there and get an overall view. It's interesting to note, by the way, that we see a huge down bar here on Amazon. Why is that significant? When we look at Amazon, it's now below POI, and we saw that also with Apple, if you recall. If we go back and look at the Apple chart here, we see POI, put open interest, dominating, and now price is below this. This is, I highlight this only, and this is more of an interpretation, but these people are in the money now, right? And the majority of puts are sitting at 170. And so I think it's very, very interesting. We're going to have to see how this unfolds this week. But with all these prices severely on the downside here and below the put open interest peak, and to a certain extent now with short-term gamma being an influencer here below the zero line, we have the potential for a rally. And so when we take a look at Amazon, for instance, and take a look at this chart, we're below POI, we're approaching minus GEX. We may experience more pain here in the next couple of days, but it's very possible that the shorter term gamma exposure that's on the negative side, as more and more, as the price drops and more of these people become in the money with short-term gamma, they're going to want short-term expiries. They're going to want to close those positions to protect that, and that can actually cause a rally. That's a different mechanism for a different video, but just be aware that when you see a setup like this where you have POI over the spot price, it's something to pay attention to, and I think it's something we should track. So I hope this was helpful. If you have any questions or comments or ways to improve, don't hesitate to let us know. The best vehicle for doing that is not a direct message to the mods, although that works. The best one is to go either up into the questions for the, if you do have general questions, and if you're on your trial or you're a gold member, you do have the ability to go up into the features improvements and list what you're looking for there, and then we can take a look and see if we can put it on the roadmap and do what we need to do. So thank you, everyone. Let us know what your feedback is on this and how we can improve.